Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 15th of November. Starting with the FTSE 100, which seems to have finally listened to the adage here of buy bonfire night, sell Valentine's Day, with a nice buy today. And we've broken recent resistance at 74.85, looking for up to 7,700 by the end of this month, as long as we hold above 74.85. RSI is pushed above the 50 levels in the low 50s, which is just the right place for a potential move to the upside, but we're stalling below the 50 level for quite some time. On the downside, if we do break back below 74.85 on an end of day close basis, which isn't actually that far away, then it's more consolidation between 7,300 and 7,500. Maybe on to the DAX, which one would presume would be doing rather better, or even better than the FTSE, and it is. We're just up to that May resistance line there, near 15,700. End of day close above that, and we're back in business, back to the main post-August resistance at 16,000. Like to see an end of day close today above the 200-day line, 15,600. To seal the deal on the DAX's upside. Also like to see the 50-day line, currently at 15,300, start to curl up. But the whole rally here predicted very well by that bear trap island reversal that we had over the course of late October and the start of this month. The Dow is next, and here you can see a third unfilled gap to the upside, which is almost amazing. Well, in fact, we did actually fill the second one, but we've had now 3 gaps so far to the upside this month. I don't think I've seen that for a long time. We were looking for 35,000 by the end of this month previously, and now we're looking for that by the end of this week or even sooner. And above 35,000 opens up the prospect of a top of 1-year rising trend channel target at 36,000 as soon as the end of this month, which really would be quite amazing given the economic or alleged economic backdrop. But obviously we're hoping that interest rates and inflation are both falling now on both sides of the Atlantic. On to Bitcoin, where we're hoping that the recent rally hasn't fizzled out. Quite comfortable above the 36,000 level, or rather the 35,000 level, which was the initial October peak, and that's come in as support, so hopefully that will remain as support. Below 35,000 there is the floor of the recent bull flag, 33,500 and then 32,100, so we need to ideally hold 35,000, and still looking for a move to 43,000 and that 1-year resistance line projection by the end of this month if we hold above 35,000. Moving on to the stocks, and starting off with Alkemy, which I didn't notice until this morning, has had an unfilled gap to the upside and held that over the last, the start of this week. We've also got a rising 50-day moving average, which gives us a combination of the gap signal and also a sideways shuffle, as I call it. That means that we're expecting big break of 140 to take us up to as high as £1.78, which is the top of that broadening triangle from August, as soon as the end of next month, and ideally sooner, given the way that this stock, when it moves, can move quite quickly. Upside valid while there's no end of day close back below the rising 50-day line, £1.30. On to Atlantic Lithium, and here with the company rejecting 33 pence, which was perhaps disappointing to some, but we are actually looking for 30 pence as a technical target, retesting October resistance. The high today so far, a measly 27.3 pence. This was a proper market, we would have at least gone towards the 31, 32 pence level and then come back, but obviously it's not a proper market. We've still got a rising 50-day line there, and the result of today's news is that we have an unfilled gap off to the upside off the low, so looking for this stock to stay above the 50-day line around 23.5 pence, and if we can do that, then looking for a retest of the 30 pence area, but disappointing that the shares are not on the right side of 30 pence with that offer for the company. On to Barron Oil, where we're still trying to get this stock breaking the 50-day line and that August resistance line comprehensively at 0.08. Above that, though, on an end-of-day close basis, still looking for up to 0.14 by the end of this year. Looks like a V-shaped or U-shaped bull flag is forming, and we've had a double RSI bounce at neutral 50, which tends to be a leading indicator on the upside. So let's see if it's third or fourth time lucky, bouncing off 0.08. Wonderful duet with Cellular Goods and Chill Brands announced today. Here you can see the shares of Cellular breaking that resistance line there from May around the 0.5 pence level, 0.52 pence level in fact. Initial target here up to 0.7, and then best case scenario target maybe by the end of January if things go well, up to a penny, but obviously that is pretty punchy and pretty optimistic, but maybe it's time to be optimistic this time of year. On the downside, we are still bullish while we're above 0.47 of the 50-day line, but below that would indicate that it was a 4-time failure near the 0.6 pence level. Moving on to Cobra, which has had a premium placing today, and I think all important people taking part in that. Unfilled gap to the upside today, just nudging the 50-day moving average at a penny. If we can hold above that 50-day line and keep the gap there above 0.93, we're looking for 1.3 or 1.4 pence as soon as the end of next month. You can see in the recent past the shares have gravitated towards the 200-day moving average as they did back in April, and we're looking for that even if the shares then retreat after that. Did suggest that above 25 pence, we're looking for 35 pence on Cleantech Lithium, and the shares seem to have so far heard the message. The lows there just below 25, that was the initial low for the start of this month, and above 25 looking for the old support, post-May support there at 35 pence, hopefully by the end of this month or even sooner. On to Helium 1, where you can see from the chart, I think the company just seems to have confused the market, but good support at 5p and good resistance, if you can call it that, at 6p, and just waiting really for an end-of-day close outside those parameters. We've had little spikes on either side. What's interesting today is that we've had a gap to the upside. It's a small one, which means we've actually had an island reversal. So if you are a fan of the shares and a fan of technical trading, maybe you'll take that as a signal that this is the final time we need to test 5 pence, and we'll head higher to 6 pence and beyond. Best case on the upside while we're above 5 is up to 8 pence, and that September resistance line projection. On to IMC, which has been a favorite, at least of mine, a V-shaped bull flag breakout, and above the initial target we had here at 1.2 pence, looking for up to 1.6 pence by the end of this month, or in fact probably much sooner the way things are going. If you're a fan of the shares and looking for greater glories, then probably the line of resistance I'm about to draw now will be the one you're looking for, which is up to as high as 2.1 pence, and we would look for that by the end of next month if everything goes well. On to Insig AI, where the fundamentals are looking quite chirpy. I think the company sold the business, etc., etc. Rising trend channel here from back in February for the channel around 16.5 pence, and above that, well, above 16 pence, basically looking for 26, 27 by the end of next month or sooner. Stock which I don't think I've covered for a long time, I don't think anybody covers actually, is Netscientific, but here we've had two unfilled gaps to the upside, bear trap, double bear trap gap reversal, so quite confident about this one, breaking the 50-day line at 58 and breaking that line of resistance from May at 60 above the 50-day line, looking for up to 87 pence by the end of next month. That's another punchy call, but let's see if that works. On to Oriole, which had a good day yesterday and seems to be willing to follow that today. Here we've got a broadening triangle base. We broke a line of resistance at the beginning of the week from back in July around 0.08 pence, and above that looking for up to 0.14 by the end of next month or even sooner. Actually, interestingly enough, even on the way down, lots of bullish candles there, and that actually underlines the way that we've had bullish divergence in the RSI window for all of that period. Obviously, the RSI based on the relationship between the opens and the close, so that's been rising even when the shares were at the lows. On to Rockfire, where there may be an opportunity for people to speculate on the bear trap. The bear trap from below 0.21 pence above that, hoping for the shares to return at least back up to the 200-day moving average at 0.29 pence. And obviously back to the top of the range at 0.35. But just notice that bear trap there and bounce off a very oversold RSI as well. Only back below 0.2, really delaying that potential recovery. Good day yesterday for Shuka, and here we've got a rising trend channel, which we've talked about before. That's been in place since December, while the shares are above a rising 200-day moving average, which is a positive there at 8.5. We're looking for 16 pence, perhaps as soon as the end of this month. The more time the shares can spend above October resistance at 10 pence, the better in terms of getting to 16 or 17. On to Upland, where the rug was pulled last month. It looks as though the shares are getting their act together. What's interesting here is it looks as though we're getting accumulation versus an uptrend line there from August. That's the red line there at 2.3 pence. So that looks like it's pretty well set in stone. It will not be broken. We were obviously very disappointing if it was. While we're above 2.3 pence, looking for a breakthrough 2.8 recent resistance, a very sort of tight range there, and then that should give us a gap fill up to 3.8 pence. Ideally, that logjam breaks before the end of this month, and the way things are going, before the end of today. On to Vast, where probably some people have been tearing their hair out, and much worse, actually, given the performance of the shares. But just the first sign here of a bear trap. The old low there in September, around 0.16. Above that, on an end-of-day close basis, we could see the shares go to fill the gap there from last month at 0.23. Best case, if you're a fan of the shares, up to 0.26 at the top of that September broadening triangle. But remember that the upside scenario is only valid while we're above 0.16 on an end-of-day close basis. And obviously, Vast has disappointed before. And finally, we have Velocys, which has been a bit of an unexpected star, actually. We had an initial target here of around the 0.58 level, which was the top of that rising trend channel based on the gap down that the shares delivered. I drew a line in the sand there, which was the upper parallel of that trend channel at 0.9 pence. And the high today, 0.865, so pretty close. No one's perfect, but the shares have done very well in terms of the rise here on what was a punchy call, and we've gapped up today. So chances are we'll still fill the gap down that we had from last month at 0.97 at some time later or during November, and also touch or nudge the 50-day moving average. Upside at the moment valid while there is no end-of-day close back below the bottom of today's gap at 0.67. That's it from me today. More updates tomorrow.